Hi, this is Jeffrey Kurt Financial Group. Today is Friday, May 16, 2025. Thank God it's Friday. Made it through the week, and a lot of stuff going on. But one of the things I think it would be interesting is to review kind of where we're at in the different markets. For example, I read and I was talking to a client about this. The S&P 500 is up 22% from the lows on April 7. That's just a remarkable move given all the stuff that's going on in late April, earnings, trade deals, budget fights, and all the stuff going on. And so again, the S&P 500 up 22%. Now, year to date, the S&P 500 is up around less than 2/3 of 1%, 60 basis points. The Dow is down about 0.5% year to date. NASDAQ down 1% year to date. And the Russell is down 6% year to date. So the Russell being, smaller companies and a much broader index, 2,000 companies in the Russell 2000, obviously. So again, I think it's kind of reflective, perhaps more than the S&P and Dow and NASDAQ of the average stock. On the bond market, there's what's called the Barclays Ag Index, which is comprised of treasuries, corporates, high yields, sovereigns, munis, and like that. And that bond index is up 2% year to date. The 10-year is about flat in yield. I think on January 1, we were around 4.6%. At the close yesterday, we were around 4.5%. The dollar's down 7%. It was lower. It's kind of rallied back in the last week to 10 days. And the commodities, broad basket of commodities, the CRB index is up around 7% year to date. The winner, though, is gold. Gold's up 21% year to date. Looking forward, we've got, the rest of the month of May and then into June. There's no, real big reports, I don't think, next week. Earnings is kind of dying down. We'll start getting some of the retailers, the major retailers, as they report, a month behind the calendar quarters. And then you've got, in June, you've got a Fed meeting. As I understand it, there's not much of any movement from the Fed, but again, the language and the guidance going forward is important. We've got a lot of discussion in Washington about the budget and whether they're going to get a bill passed or not, and I think that's going to be important to follow, as well as the bond market. Is the bond market signaling they're not going to buy the deficit or fund the deficit as easily as perhaps they have in the past? So kind of a summary of where we're at. Hope you enjoyed. Let us know any thoughts, questions, suggestions. Have a great weekend. We'll be back on Monday. Thank you again. Goodbye.